The stock market is often misunderstood. To some, it looks like a fast-moving scoreboard filled with numbers that rise and fall without warning. To others, it feels intimidating, unpredictable, and risky. But at its core, the stock market is something far more powerful. It is a system that reflects innovation, discipline, patience, and long-term belief in progress. For more than a century, markets have quietly transformed ordinary ideas into global industries. They have helped small companies grow into household names. They have rewarded those who understood risk, respected time, and stayed focused when emotions told them to quit. The market does not promise quick wins. Instead, it offers something more valuable: opportunity for those willing to learn. Every stock represents a real business. Behind every ticker symbol is a company trying to solve a problem, improve efficiency, or change the way people live and work. Some succeed, many fail, and that balance between success and failure is what makes markets honest. Reward is never separated from risk. History shows that life-changing returns rarely come from chasing hype at the top. They often begin quietly when a company is still underestimated, misunderstood, or operating outside the spotlight. At that stage, uncertainty is high, but so is potential. This is not a story about guaranteed profits. It is not a promise of overnight wealth. It is a story about how the stock market works when innovation meets patience, and how one company, hidden in plain sight for years, became impossible for investors to ignore. We are living in one of the most transformative economic periods in modern history. Technology is no longer just supporting business, it is reshaping it entirely. Artificial intelligence, automation, and data-driven systems are changing how companies operate, how consumers interact, and how value is created. Among these forces, one industry has quietly become foundational. It sits behind smartphones, smart homes, vehicles, call centers, and digital assistants. It connects humans and machines through language, voice, and real-time interaction. This sector does not rely on physical products alone. Its value comes from software, data, and continuous learning. Companies in this space often operate globally. Their systems are embedded into products used in major cities across the United States and beyond: New York, San Francisco, Chicago, London, and Tokyo. Consumers may interact with this technology daily without ever knowing which company powers it. From customer service automation to in-car voice systems, this industry reduces friction, improves efficiency, and saves time. Businesses rely on it to scale operations. Cities use it to manage services. Investors watch it because its growth is tied directly to the future of digital communication. Despite its importance, this sector remains difficult to evaluate. Revenue models are complex, development cycles are long, and profitability often comes later than traditional industries. That uncertainty creates hesitation, but it also creates opportunity. Some companies in this space operate quietly for years, building partnerships, refining technology, and strengthening balance sheets before the market fully understands their value. This story follows one such company. At the center of this story is a company built around a focused idea, enabling machines to understand and respond to human language in real time. Its business model is not built on consumer branding alone. Instead, it generates revenue by licensing technology, providing software solutions, and forming long-term partnerships with larger corporations. The company earns money through multiple streams. These include usage-based fees, subscription services, and enterprise contracts. Rather than depending on a single product, it spreads risk across different applications and industries. This diversification has helped it survive periods of market volatility. Financially, the company has experienced both growth and pressure. Like many technology firms, it invested heavily in research and development. This impacted short-term profitability, but strengthened its long-term position. Investors often debate this trade-off, but it is a common pattern in innovation-driven businesses. Market confidence around the company has shifted over time. There were years when it was largely ignored by institutional investors. Trading volume remained low, and analyst coverage was limited. Then, as artificial intelligence gained mainstream attention, interest began to rise. Recent performance trends showed increased revenue consistency, improving margins, and stronger partnerships. Industry news highlighted advancements in its core technology and expanding use cases. Still, without a recognizable consumer brand, the company remained under the radar. At this stage of the story, the company exists as an idea more than a name. A business operating inside one of the most important technological shifts of our time, waiting for recognition. Halfway through this journey, it becomes clear that anonymity is no longer possible. The company at the center of this story is SoundHound AI, a publicly traded artificial intelligence company listed on the Nasdaq under the ticker SOUND. SoundHound AI focuses on voice-enabled artificial intelligence. Its technology allows machines to understand speech, context, and intent with speed and accuracy. Unlike basic voice commands, its systems are designed to handle complex conversational interactions. What makes SoundHound AI stand out is its independence. While many voice technologies are tied to large ecosystems, SoundHound provides solutions that can be integrated across platforms. This flexibility has attracted partners in automotive, hospitality, and enterprise services. Investors watch SoundHound closely because it sits at the intersection of AI growth and practical application. It is not building speculative concepts. It is delivering tools already embedded in real-world systems. Within the stock market landscape, SoundHound occupies a unique position. It is small enough to be considered a penny stock at times, yet established enough to have global partnerships and years of development behind it. That combination creates both opportunity and risk. SoundHound AI was founded with a long-term vision to create voice intelligence that feels natural, fast, and accurate. Early years were focused on research rather than revenue. This delayed market recognition, but built a strong technical foundation. One of the company's major milestones was expanding beyond consumer-facing apps into enterprise solutions. Automotive partnerships became particularly important. Voice-enabled systems and vehicles require high accuracy, low latency, and reliability, areas where SoundHound invested heavily. Challenges were unavoidable. Competition increased as major technology companies entered the AI voice space. Funding cycles tightened. Market sentiment toward small-cap tech stocks shifted multiple times. SoundHound faced these pressures by narrowing focus and strengthening core offerings. Its competitive advantage lies in proprietary technology and flexible deployment. Instead of forcing clients into a single ecosystem, it allows customization. This has helped maintain relevance despite competition. Risks remain. The company is not yet consistently profitable. Revenue growth must continue to justify valuation. Market volatility can impact small-cap stocks disproportionately. Investors must recognize that short-term price movement may not reflect long-term value. From an investment perspective, SoundHound represents a classic growth stage company. Short-term traders may focus on momentum and news. Long-term investors evaluate technology adoption, contract expansion, and financial discipline. Looking ahead, SoundHound AI's future is closely tied to broader industry trends. Voice interfaces are becoming more common, not less. As devices multiply, the need for intuitive human-machine communication grows. Expansion opportunities exist across sectors. Automotive remains a strong pillar, but hospitality, customer service, and smart devices offer additional growth paths. International markets also present potential, though expansion brings regulatory and operational complexity. Market expectations are cautious but interested. Analysts focus on revenue growth, consistency, cost management, and partnership depth. Growth potential exists, but execution will determine outcomes. Balanced optimism is appropriate. SoundHound is not guaranteed to dominate its sector, but it has secured a meaningful place within it. That alone keeps it on investor watch lists. The stock market rewards understanding more than excitement. Stories like this remind us that behind every ticker is a real business facing real challenges. Learning how companies grow, struggle, and adapt is more valuable than chasing headlines. SoundHound AI's journey reflects the reality of innovation-driven markets. Progress is rarely linear. Recognition often comes late, and patience matters. Markets involve risk. No technology is immune to competition. But informed research, long-term thinking, and realistic expectations remain the strongest tools any investor can have. In the end, the most important investment is knowledge. Because when hype fades, understanding remains. And that is what truly compounds over time.